This week we're going to talk about some things that we think you should know, including the asset. Hello everybody, my name is Barry Horvath and this is Moving Forward TV with your local market update.
And I am DeLynn Gaston. Thank you so much for joining us. We have the asset on today. We're talking about assets, not necessarily this kind of asset. He's just dang cute, isn't he?
He is cute.
Any Mandalorian / Star Wars fans out there know him as the asset or the child. He doesn't have a name. So I've called him Boda for Baby Yoda. You know, I've called him Boda.
All right, so I have to be honest with everyone.
He has no idea what I'm talking about.
I don't. And I consider myself a Star Wars person, but I have no idea. But welcome to the show. Glad you could join us.
He doesn't talk, but he says thank you.
So he doesn't talk in any of
No.
the shows, the episodes?
No.
Does he just sit there? Does he move?
Yeah, he moves.
Is he alive?
Yeah, he moves.
Or is he a doll?
No,
'Cause-
he's alive. Yes.
Ours is-
He's a very important part. He's the asset.
So what?
Everybody wants him.
Kind of like everybody wants a new home because it's an asset.
That's right. Yay.
Yeah, but-
Ba-dum-bum. Good segue.
Yeah, good. Well, I want to stay off track too long. I want to get down to business
That's right,
of
that's
what
right.
we're talking about. We get a lot of questions every single day.
We do.
And if you want to be on top of your industry, you need to watch our show. And no, don't just watch a minute of it. Watch all of it because I promise you will learn something every single week because we do.
And we thank you for your questions because that lets us know that you're, we all are trying to make transactions go as smooth as possible, right? And unfortunately, like I think Barry said at the last Lunch and Learn, raise your hand if you've never had an issue with a transaction. Nobody raised their hands except one person who had a cash transaction, which I get. Cash transactions usually go easy, but if there's a mortgage involved, usually there's issues that come up because of all of the changes in the guidelines and things like that. So we appreciate your questions coming in. Keep them coming to us. And these are just some of the things that either questions that came to us or just things that came up that we felt you would want to know.
We feel like you should know. And right now, in the real estate industry, I know many of you are real estate professionals, potential home buyers, people thinking about buying a home, but these are things we think you should know because especially if you're in real estate, it's so competitive out there right now. If you don't have a competitive edge, knowledge-wise, knowledge is king. Someone else next to you does because there are thousands and thousands of new agents right now joining the workforce and they're your competition. I hate to say it, but they are your competition. So our real estate professionals, you probably need to have a competitive edge. And at least we're not asking you to be a lender because if it were easy, everybody would be doing it, right? But we know what you do is not hard. Not hard.
Not easy either.
Not easy either. It's difficult. People think you just write a contract and show up at closing, and we all know that's the furthest from the truth. So, but if you have a working knowledge of some of the lending guidelines, that might help you in the future and save deals because we close deals I feel like nobody else can because of our knowledge. We were just talking about that.
I agree. And fewer of our deals are going to fall apart at the last minute because we are very thorough up front.
We're not surprised. We did.
And it's not just us. I got to say, it's our whole company. They are just amazing with some of the stuff and the tools and things like that they give us. So let's go into some of the stuff.
So we have some firm
You want to do
facts
this one
right
first?
here. No.
No. Okay, never mind then.
I'm just kidding. I just wanted to see what you did if I said no.
One of the questions that comes up a lot
Yeah, this is a big one.
is how long do people have to wait after a bankruptcy, after a foreclosure, after a short sale? after a deed in lieu of foreclosure.
Yeah.
People think that, which I find odd, but people think that it was a deed in lieu of foreclosure, so that doesn't affect them at all. Because they gave up their house, right?
Yeah.
So willingly.
Voluntary
right.
repossession, basically.
And they think
what
that
it
that
is.
shouldn't hurt them.
You know what's so funny?
Yeah, it does.
Where there's a little, FHA doesn't have specific rules per se, but every lender has overlays on how they really do things. So, but most of your FHA are going to require at least 3 years.
Right.
So if you had a bankruptcy, foreclosure, 3 years is kind of where you're sitting at. And here's where the mystery is on all this. A lot of people walked away from houses back when the market collapsed, and those houses sat in limbo.
Yeah.
And they didn't do anything about it. And they thought, well, I moved out in 2011. Well, guess what? The bank didn't do anything until 2015 with the property. It sat there, it was vacant, just because you didn't occupy it. The date it starts is when the date that it transfers title. That's very important. Obviously, it's different if you filed bankruptcy and you included that in the bankruptcy.
And that's with any of them. FHA, VA, everybody goes by the date of certificate of title, the date that the property was transferred. All lenders across the board.
So, bankruptcy. How long on bankruptcy? That's another big one that comes up. How long do I have to wait to buy another home?
And again, it depends on the loan product type. So on FHA, after bankruptcy, it's 2 years if it is a Chapter 7 or Chapter 11. On a Chapter 13, which is the one where it's a reorganization of your debt, that is different. And it's different on conventional as well. It depends. You have to get permission from the bankruptcy court, even if they're still in it, because most of those are like 5 years, 3-year plan or a 5-year plan, right? So and you still have to get permission from the bankruptcy court, but it could be as little as, while you're still in it, you can actually buy a home if it's okay with the bankruptcy court.
And short sale is the other big one. There's time horizons on that. 3 years on an FHA, 4 years typically on a conventional loan. So
what people don't realize is they think, well, I had a bankruptcy or I had a short sale or I had a foreclosure or something like that. I can't buy a house for 7 years. I can't buy a house for 7 years. We hear that a lot. Or if I do buy a house, I have to put 20% down. Not the case. So don't let people, if they say that, tell them don't worry about it. Just talk to us first. We don't expect anybody to remember all of this stuff. We don't. That's why I have this hanging up on my wall. I don't remember all this stuff off the top of my head.
And here's the funny part. If you don't like it, wait a minute.
Yeah.
Because the rules change every day. That's why we need to stay up to date on these things. But you know what? Maybe when you're out and about, maybe you're looking at houses right now and you're thinking, I don't qualify, like DeLynn said, for 7 years.
Right.
And you as real estate professionals, while you're out and about, say, no, yeah, I know you had a short sale like 3 years ago. You might be ready to go. You keep that in mind.
And here's the thing. Some lenders, not every lender is the same on all of these things. As Barry said, they have overlays, but so do Fannie Mae and Freddie Mac. So Fannie Mae and Freddie Mac, I know you've heard of them. They actually on a few things differ, and this is one of the places that they differ. So some lenders only go through Freddie Mac, Freddie Mac, regardless on a foreclosure, it's 7 years. Doesn't make a difference. Fannie Mae actually has a little bit of more leniency, and if the property was included in a bankruptcy, they'll do it in as little as 4 years. So there's definite differences, and there's some people out there who they say we're just a Fannie Mae shop. Others that are just a Freddie Mac shop. We happen to be both. We sell to both Fannie Mae and Freddie Mac. So, if we have somebody who does have that situation, okay, I know I got to put them into Fannie Mae instead of Freddie Mac.
All right, the asset is thinking.
He agrees. He's just so darn cute.
Sorry, buddy. Sorry, didn't mean to touch him. All right, next big question. What's the minimum credit score requirement to get a loan right now? I can't tell you how often that is. And you know what? You know what's so funny? When people ask me that question, what does that tell you, DeLynn? What's the minimum credit score? What are you thinking in your head? Their credit sucks.
I know. Right?
You wouldn't ask me unless it's bad. But you know what? It doesn't really have to be that great.
Right.
Like on a conventional loan, 620 is kind of the bare bones minimum.
Right.
But more than likely, if you have a 620, you're probably going to be more of an FHA buyer. Where do I like to be? 640. because the adjustments to the rate, you will pay a higher rate, which indefinitely means you will qualify for less purchase price amount if your rate is higher, because your debt ratio will be higher. So 640 would be better, but you can go down to a 620, and that's conventional or FHA.
Or FHA, right.
Yeah, but
FHA used to go a little bit lower, but since COVID, they've raised their minimum credit score.
And
We've raised the minimum credit, because again, FHA doesn't have any minimum credit scores. It's the banks and the lending institutions who have the requirements.
And I love to say this, if you're under a 700, you're going to go FHA. Not for any other reason, and it's not a bad loan, folks. Let's think about that. It's a great loan, but you are going to have more buying power, get a way better rate. Even if you put 20% down and void MI or PMI on a conventional loan, you're going to get your monthly payment will be lower.
Depending upon how
on
low that
FHA.
credit score is.
Yes.
We compare the two of them because FHA obviously has mortgage insurance, and if you put less than 20% down on a conventional loan, you have mortgage insurance, right? You have that PMI that everybody loves so much. So the PMI, the lower your credit score is, that PMI is through the roof. They charge a lot for that. So I compare an FHA and a conventional with the PMI, and maybe on an FHA, and I've told many realtors this too, well, in this particular client, the FHA mortgage insurance is only, let's say, $122 a month, where that same loan, that same one under PMI, under a conventional loan, it's like $272. I mean, it's like $100 difference
don't just look
because
at
of
the rate.
credit scores. So don't just look at rate,
Right.
look at the whole picture. Let us guide the people as to the best loan they can do.
All right, here's my next question.
Okay.
What if I don't have a credit score?
That's another one that we've been getting lately.
Mm-hmm. And there are actually people that don't have a score. They're like, I pay cash for everything. I don't believe in credit, but I want a mortgage. How do you handle that?
There are actually, Fannie Mae does have a program.
There's options and parameters that you can actually get a home without a credit score. So that entails a little more legwork, but it is a possibility. So if someone tells you they don't have a credit score, don't rule them out. So if you're looking to buy a house and you don't have a credit score, we can maybe help you. So talk to us. Okay, next, since we love the credit stuff.
Next. What's on you got the list.
All right.
Well, the
What
questions.
what about when you have a frozen credit score?
Oh, that's a good one. Yes.
So if you have a frozen credit score because you suspected fraud or something, you didn't want, for whatever reason, you had to freeze your credit, you must have at least 2 available.
Right.
And then we'll use the lowest of the 2 to qualify you. So you don't need 3 available. You
Right.
can leave 1 frozen, but 2 must be unfrozen to move forward.
And we don't care if you refreeze it again after closing, but don't refreeze it before closing, because as many of you already know, right at closing, they do what's called a credit refresh to make sure you haven't done anything stupid in the meantime.
Yes. Yeah, so that's another question that comes up often. What about judgments
Oh.
and tax liens? How do we handle those?
See, he's got all the good ones.
Yeah, I do.
Right. And again, they are handled differently depending upon if it's an FHA loan, a VA loan, a USDA loan, or a conventional loan. Everyone has their own set of guidelines. So you've all heard of the automated underwriting system, the AUS, and you might have heard us say,
I haven't.
oh, we ran findings.
never heard of
That's
the
what they're
asset
called.
either, though.
Yeah, I know. You never heard of the asset. You live in a bubble.
I know.
So under a conventional loan, they're actually a little bit more lenient on things like that. FHA still seems to be a little bit stricter when somebody has had collections and things like that. I don't know. It's actually like a 50-50, So with a conventional loan, it's going to be whatever the findings say. When we run it through the AUS, if the AUS says all these got to get paid off, then all these got to get paid off. If it says none of these have to be paid off, then they don't.
And it really will
there you
depend
go.
on the size and the age of the
Yes.
judgment. But typically, tax liens will almost ultimately.
Tax liens always and judgments, especially because they can attach to property, so they're going to have to get paid off.
So.
On a conventional. On an FHA, the funny thing is, a tax lien absolutely always has to. A judgment, they might not make it, but if it's a collection, maybe a bunch of medical collections, anything more than $2,000 has to get paid off.
Right. Very good.
Cumulative, that is.
Another big question. Everybody's looking to refinance right now. We know about the adverse market fee coming into play. If you don't know about it, you should know. There's going to be a half-point adjustment coming up.
Very
and
soon.
maybe you're working with a lender and you went online and you signed up and you no longer like that lender because they don't answer your calls or follow through with you. Am I digging anybody particular? Anyway. And you want to transfer.
Located in Michigan.
And the name of the company starts with the letter. Never mind. We can't do that. Hey, there's a lot of great lenders out there. That one just doesn't happen to be one of them. But sorry. Can you transfer? You had an appraisal done. Can that appraisal be transferred to your new lender, whoever it may be?
On a conventional loan, no, they are not transferable, but on an FHA loan, absolutely.
And you know what's so funny on an FHA loan? It actually sticks with that property.
I was just going to say, yeah, it has to, and it's going to stick with there for 6 months anyway, and it can be. The trick is that the initial lender that we won't mention, whoever ordered the appraisal first, they have to release it. Now, the good news is FHA requires that person release it within 48 hours from upon the request from the new lender, and if they don't, their FHA licensing is in jeopardy.
Yeah, they must release it.
Must
so they
release
cannot
it.
hold you hostage on an
Right.
FHA. Conventional, you will need a new one. Hey, check
But
out.
lenders try to hold it hostage.
You're right.
We've definitely had them try.
It might be worth dumping that old lender. Just saying. Get the new appraisal. You might get, who knows, the value comes in better. You get a better loan to value. The higher the value, the lower the LTV, the better interest rate you could potentially get.
Yep.
Okay, next big question. Do you have any, DeLynn, or is it just all about me?
So this one doesn't have to do with credit, but this has to do with large deposits. Another area that we have, that we have a lot of struggles on, it seems, people moving money around in their accounts. That's a very, every time money moves, we have to follow it. So if it's a large deposit, I know a lot of you realtors already know, and you tell your people don't put any deposits in.
But do
Anything.
the buyers know?
I know. I tell them anything other than your paycheck, we're going to ask about. Not necessarily we always have to source it. So something interesting to know, conventional is a little bit stricter on this than FHA is. FHA will actually allow a large deposit up to 1% of the
That you don't
purchase
have to
price
source.
that you don't have to source. So, if the purchase price of the house is, $200,000 and the person makes a
Which are
deposit,
hard to
they
find
sell,
right now.
yeah, they sell, furniture and stuff like that, and they deposit, $1,800 in their account. I'm good with that. I don't have to source it if it's an FHA file.
When she says she's good with it, she means the lender.
Yes.
It's industry hold, not DeLynn Gaston's rules.
Right.
Remember.
Yes.
But
FHA is okay
the fact
with
that
it.
she's good with it is more comforting. I get it.
So that one's good. And conventional, and when we say that we have to source things, just so that you know, it has to be. We don't just need to know where it came from. Oh, that came from, I sold some furniture or whatever. But they need to see like the person's canceled check, and we have to, it's a rigmarole. Just saying.
I like that word.
It's a rigmarole.
Rigmarole. Look that up, folks. Okay, let's move on. So this one comes up a lot, and it kind of, from our realtor partners a lot, and not to insult them, but let's just say people are downsizing or upsizing, and they have a pending sale on the current property. And here's the facts. The current sale, if they're selling a property, must close before the next sale can happen. It can't happen the day after unless they qualify with both debts, meaning both mortgage payments, both taxes, both insurances will count against them. If they still qualify, you're fine. Otherwise, that first sale must close first. And people say, oh, it's going to close the next day. Why does it matter? It does matter.
It does matter.
What if it blows up?
I know, and people will say to us, yeah, but it's closing the next day, and I don't want to put the pressure on them of how we want to give them an extra day to be able to move into the new house. That's lovely, and we'd all love that extra day, but
Lovely.
But if there are not, I know none of us like simultaneous closes. We do them obviously because we have to, and I do realize it puts a lot of pressure on. But if they
All of us.
if they can't support both mortgages, and we've had this happen where very similar situation. And, the sale didn't happen. It didn't happen. So they have to be able to carry both mortgage payments. Unless it's a simultaneous close, they have to be able to carry both mortgage payments.
The mortgage that they're selling must be paid off first in order to not count into their debts. It must close, it must fund, must be done, and we're going to ask for proof of it at closing. So keep that in mind. I know there's a lot of, we're seeing purchase contracts now contingent on the sale of their existing property. So it does come up quite a bit now. All right.
Because they say, well, we have it under contract. It's going to close. Yeah, not good enough. It must close.
Yeah, can I just send you the contract?
Yeah, that's what I got asked. You can see it's going to sell. It's closing, on the 15th or whatever.
Doesn't work that
way. Closing on the 13th.
And again, this isn't DeLynn saying
no.
It's the industry. Okay.
It is.
All right. Next big one. Can revolving debt be paid off to lower the DTI for a loan? Yes, meaning your debt ratio is high, you want to qualify for more. Maybe it makes sense to put less money down and pay off the credit card or the car. Then
I'm a master at that one.
Yeah, I mean, it happens a lot. People are like, the taxes came in, were higher, the insurance was higher than we thought, so now the debt ratio is a little high. Can they pay off a revolving debt to lower that payment and qualify for it? Absolutely. Even on a refinance, if you're looking to lower your monthly payment and you want to consolidate debt, we can actually pay off that debt to help you qualify for the loan and lower your overall payment. Sometimes it makes sense to consolidate and not pay 18, 20% interest on a credit card when you can lock in a 1.5% fixed rate for 50 years. Isn't that what they are?
Not quite yet.
Oh, okay. Well, someone's going to call us and say,
I want that 1.5 for 50 years.
My lender in Michigan is going to give me 1.5% for 50 years. They should use them.
Somebody did say they got a 1.99 from that person. And when I looked at their thing, they were paying like $7,000 in points to get it down there. Really?
Yeah, anybody can get you any rate. What are you willing to pay
off that 7,000 points?
And a buy down. That's a whole nother thing.
But going along with paying off debt, one of the other things, and I don't know if you have it on there, but that kind of like slides into student loans.
Slide.
Yeah, I know. Do you have that coming up here?
Nope.
Okay, so student loans, I do just want to mention on student loans. So this is the other thing we get. Well, it's in forbearance, or it's deferred. I'm still in school, so it's deferred. Doesn't make a difference. Doesn't make a difference. They changed that a couple of years back. It used to be if the student loan was deferred for more than 12 months, and actually VA is the only one who still does it this way. If the student loan is deferred for at least 12 months, we didn't have to count the payment. Then what happened is the student loan started kicking in, and people now were struggling with their mortgage payment. So all of that got revamped a few years back, and now we have to count a payment. So again, depending upon which product we're going with, a conventional loan and an FHA loan, they look at it two different ways. We have to have a payment. We either have to have the borrower get a payment of what it's going to be. A lot of times they are income based. So if the person's, like a resident or whatever at, a hospital or whatever, something like that, his income is a lot lower than, what it's going to be several years from now, but we still, depending upon the loan product, again, like FHA requires, it has to be, we have to take the higher of either 1%, if it has 0 for a payment right now, either 1% of the loan amount.
You get excited about this.
Or fully amortized. So what is that going to be fully amortized? So sometimes I might say to you, we need to go conventional with this, because conventional will use the payment amount based on income, whereas FHA will not. So it depends on, but the bottom line is, regardless on a student loan, unless it's a VA loan, we're going to have to do a payment of some kind. And people don't realize that, because when we're talking to them at first, I know I'm just rambling. When we're talking to them at first, I ask them specifically, do you have any student loans? And they say no. And I say, even ones that are deferred, because sometimes they think because they're not paying their student loan or it's deferred, that I don't need to know about that. So again, it all has to do with being very thorough up front and asking those questions. Stop!
What did I do? Wait till you watch the show later. You'll love it.
It's just
Anyway,
I do get passionate
you know
about
what?
it.
You do get passionate about it, but you know what? Student loan debt, there's so much of it
It's
now.
so high.
It is. So it's going to impact one of you buying a house right now is going to have a large amount of student loans and it's going to come up for you. Or you as our realtor partners are going to come across somebody, the student loan debt, and it does make a difference on what kind of house, how big a house.
Regardless
you
if
can
it's
buy.
deferred or not.
Yes. All right. Other big things that come up. This one seems elementary, but it does come up. Can you have a single family and a mobile home on a property?
Oh, this
with
one's
no
a good
value
one.
to
It
the
comes up a
mobile home?
lot.
Yes.
No.
No. So if
No,
there's-
you can't.
So if there's a manufactured house on a property and a single family, that manufactured house has got to go.
Must be removed.
And it
Gotta
doesn't
go
mean
means
that-
must be removed.
That doesn't mean you hook it up to the back of your pickup truck and pull it off the property. It means it must be removed from the title. It cannot be attached to the land. It cannot be part of the parcel. So that can take a lot of little extra legwork. People are like, oh, it just sits there. Don't give it value. It doesn't work
Under
that way.
any loan program, FHA, VA, conventional, under any loan program, no one allows it.
Know that before you list that property, if there is another property on it, call us.
Another
if you-
dwelling.
Yes, or call our friends at Dynamic Title. They can help you. They can help take care of that for you. All right. What's the seasoning requirement for cash out refi? Love this one. Meaning you bought the house for $100,000. It's really
3
worth
months ago.
$200,000. Yeah. Can you get the cash out? Only the loan parameters are only based on the purchase price you paid. After 6 months, you can give it full value, full appraised value. So it comes up a lot.
Yes, it does, actually.
All right, DeLynn, we gave a lot of stuff this week. We have
know.
we have a ton
and
more.
there's lots more, so
Yep.
we'll do this show another time, too.
But we need to wrap up here, tell you about upcoming things. We got Bowling for Boobs going on right now with WPBA.
It is Breast Cancer Awareness Month.
Yes, and it is a virtual
If you
event
haven't had
this
your
year.
mammo, go get it.
Thank you for all of you who keep supporting our great events that, we're going to help local people with breast cancer in needs in this program. So Lunch and Learn coming up next month. We're going to
So how
talk
can
about
they
a quick
donate
call.
before you run on to
Go
Lunch and
on
Learn? How
to
can they donate?
WPBA. Go to WPBA.biz. WPBA.biz. Get on there. Yes, you can donate. Love the hands right there. And yes, and we are part of the Community Cares program, so we can help you if you're struggling with payments right now. Come see us. Come talk to us. Rent, mortgage, utilities. Yes, we can help you. And our Lunch and Learn coming up is what, November 9th?
Okay.
Tuesday. Go with it. Talking about quick wall. Great stuff. Hey,
Thank you all for watching. We are Today and Every Day.
moving forward. Have a great week, everybody.
See you next week. Bye-bye.